Alright guys, glad to have you onward again today. We're Wednesday, which means same old story. We're going to look at flow trading, intraday timeframes and stuff like that. But quick disclaimer in here, you're going to probably hear a lot of noise on top of this video today because there is construction works on the floor right above my head. So don't be surprised if you hear a lot of background noise. I'd rather like to still record that video including the noise rather than just keeping it all. So here we are. I'm going to make this one quicker than the usual to save you from these noises. Okay, anyway, the story still kind of remains the same. I need to zoom back into the lower time frames and, well, remember the context which we're in. That means there are two equally viable scenarios which we're in. The bears were selling into this area, and I told you back then on the weekly charts and stuff like that, the longer time frame, that in my humble opinion 4200 was a critical area to pay attention to, and that I would never sell below these prices. So I decided to take my profits. I'll explain why. Basically, that's the way it goes. So remember, on the H1 time frame, I was both buying on the Bollinger Band, so somewhere in those areas. I think that was in here, if my memory is right. Give it a second to plot. Come on. All right, sorry about that. So here we go. Remember, this is where we got in. Basically, the second flow started pretty much at the Bollinger Band instead of the moving average. And we were saying, okay, we're going to keep it consistently down until there is reason to reverse positions, which means a significant reversal in the market. As we headed into the 4200, personally, I decided to take my profits out of the level. Just basically, I had the limit trade to say I'm not going to sell anywhere beyond 4200. So it has been a plain taking profit in here. Anyway, the market confirmed the pattern. Remember, I told you pay attention to third range boundary now, and we had this one delayed, meaning we've gone from context to context, broke the trend line, failed to make new lows, and then broke the previous high point. So that is the delayed third range boundary that is happening here. That means, of course, if you were a bear, you needed to take your profits in here. Remember, when the market breaks the previous high point after context to context, failed to make new lows and stuff like that, means your third range boundary has happened and you just missed it, okay? So that's the way to go. That just means now the bears have gone out, okay? Those who were selling are out, though the flow number 2 sequence is terminated. So now two things will happen out of this. Option number 1, we're going to start back up again into the third bullish flow in our sequence. Remember, this one is still definitely doable so long as we don't break the flow to low point, which means, well, for those who bought, even me included, that means I certainly don't have bought at the lows, and I'm still in this trade. And like I said, I'm going to keep a large stop loss and a tinier position sizing due to the high market uncertainty. Remember, on the high time frame, all those volatility alerts that were like saying, okay, go stand by, don't be too aggressive on the position sizing, and take a large stop loss. Okay, remember that the invalidation, maximum invalidation, is the bottom of the previous sequence. Okay, so if we go out to, oops, sorry about that. If we go down this path, there's no way I can defend the bullish positions anymore. So that means the maximum stop loss is in here, okay? Of course, now that the bottom seems to be in, the third range boundary is placed. Of course, I hope you guys got that one. I have a necessary invalidation if we're trying to make new lows. Of course, I'm not just putting a blind stop loss in here to attract the market makers, but if the prices goes back there again, I'm gonna stop the bullish position. In the meantime, I just made a nice gain. So of course, once again, remember that flow trading isn't about predicting the market. It's just try to navigate it the best possible way. So now I have a gain that's in my pocket, which means even if I had to be stopped on the bull trade, it's probably going to be a net break even. That means probably the gains will be covering for the losses. On the other hand, also remember one thing, I have made that decision myself, and this depends on all of you guys, that I said there are two options. Either you do one side of the trade and you forget about the other. You know, there was a bearish side and a bullish side. You can either not take any of these two, you can take one of these two, or you can take both of them, and you can also take both of them and modulate the risk you take. That means, personally, I always trade in the side of the low risk strategy, which means the lower strategy are secular bullish trends in the market. So like I said, I like to modulate my exposition. Therefore, the bullish positions that I have slightly higher position sizings than the bear trade. Okay, so that's really the way it's going. That means I made a tiny but still interesting profit to the downside, and it's probably going to cover the potential loss for the bull trade. And of course, if the bull trade goes through, that means this one is only validated when it breaks the previous high point. So I know the minimum targets are above 4,600. If this one gets delivered, of course, it's going to deliver much more gains than the downside opportunity. So that's really the way it goes. I don't know for now. All I know instead is that on a 1 hour scale, remember, we have 2 flows to the downside, and we still have a weekly resistance area in here. So that means the bears could still try to strike a 3rd flow to the downside. And this 3rd flow, just like the sequence always tell you, remember, sorry about that. Okay, the sequence is always, you just reverse engineer this thing. We are in a bearish flow now, so the 3rd is always on the higher Bollinger Band. Okay, only. We already have the 2nd flow, we already have it terminated, so the step now is for the bears to wait for the Bollinger Band. When the Bollinger Band gets reached out to, they can take another selling entry. So, you've got a plan. You know what I'm going to be doing with this Bollinger Band. I'm of course going to sell it again. That means the bear trade that I took profit out of is going to probably be reinvested out of the bearish Bollinger Band. So that's really the way it goes. If the market goes higher, I'm going to sell it. That's really the way it goes. And I bought it before, and both of these trades evolve in different worlds. There are one side that goes to the upside, one side that goes to the downside, and I don't choose. The market will choose for me. All that I can say is that actually, in some cases, both can actually work out. Remember that if we go higher like that, I will probably take a sell in here, and if the market goes up to this point, I'm going to be stopped on this trade, and the other one will deliver gains. And the way I manage position by taking slightly higher risks on the upper side also means I'm going to make more gains. Though that's really the way it goes. By navigating this way, instead of just trying to be proven right and avoiding being proven wrong, but stepping aside from this and just saying, okay, I've got a set of rules, I've got my context, and even though both scenarios tend to be confronting each other, one to the upside, one to the downside, I'm not going to make any preferred choices. I'm going to take both, and in the end, I should still make more money. So that's really the way it goes. Normally, you also know that there is a likely chance that one out of these 2 scenarios will end up with a stop loss. And if you can't stand that, well, you should really think of it twice. Are you really into trading to just be right and take some money all the time? Or are you really in trading to significantly and consistently make money in a long period of time, not getting any personal or familiar with any single trade? That's really, in my humble opinion, the second option that should be down the line. Quick look at cryptocurrencies as well before we terminate this one. Like I said, it's probably going to be a bit shorter than the usual. We're switching to the higher time frame because flow trade is in 4 hour in here. Same old story when it comes to Bitcoin. We've reached out the lower Bollinger Band out of these prices. This is where I bought, and nothing is going to happen until we either break the previous low point, which is the maximum stop loss. Remember, that doesn't mean your stops are there. That just means there's no fucking way you can defend a stop loss below these prices. That's the maximum price you could go put your stop losses to. And of course, nothing happens until we break the previous high points. And well, I don't really pay too much attention to what happens in between. Same old story, folks. I know, and I see hell of a lot of people out there just predicting how fast we should go. The market is too much constrained. Is this or that? There's so many things happening. The ETFs, the war, the new situation now. So there's always going to be new situations. Though the lesson today is, once again, you have a set of rules. The set of rule is goddamn simple. That means my 6-year-old board should pretty much be able to do it on its own. So the thing is that when the rules are simple, that means, well, the risks are elsewhere. The number one risk in flow trading is you. That means the set of rules is what it is. You may like it or not like it, but it's easy to apply. Though the actual constraint comes from the ability of you applying those rules without questioning any of it. That's really the way it goes. Because sometimes, of course, you're going to fall for the narrative 2 biases. You're going to feel like you're missing on something. That's the impatience bias, and you're going to jump in without any significant reasons to do so. You might be missing some trades all the time. So once again, if a trade has been missed, well, don't try to catch it up later. Just let it be. That's the way it goes. You have a set of rules, trade when you have to, and that's it. Otherwise, the other problem is the fear of uncertainty. That means so long as the market doesn't decide, that means the market doesn't go there or there, there's no way you can choose. And the market doesn't give a fuck about you, so try to be rational again. Uncertainty is the market's and current ambience, and it's forever will be. I've never had in 10 years of career a moment in which the market knows where it's going. Otherwise, that's a trend, and trends rarely last forever. So that's really the way to go. The market is most of the time in uncertainty environment. So you'd rather like to embrace that as the norm rather than the exception. I know so many of you folks out there think that, well, the markets have to move. Well, most of the time they don't. So really try to understand and really get that one down, okay? So don't try to predict the timing. Don't ever try to resist to uncertainty. Just embrace it. There's no way you can control. The market doesn't give a fuck about you. You know which levels matter to push the sequence one step further. Though now, until we get there or there, Jesus, just let the fuckers talk. But don't pay any attention to this. The more you're going to look at the information flow and stuff like that on social medias, the more you let noise and uncertainty dive in. So that's the number one thing that I would like to remind you again today. If you're a flow trader, just don't pay attention to anyone else's biases or whatever, okay? Just trade what you have in front of you. You have a very simple sequence. You can easily assess whether you're trading according to that sequence or trading for whatever fucking reason has driven you to press that button. Until then, so long as you press the button for wrong reasons, that means you still have a lot to learn to be a successful trader. And that doesn't mean you're just yet another losing trader. It just means you're learning and get to really progress in the right direction. There's only one way out of this. Either you consistently falling for the biases or somewhat someday you succeeding in not falling for these. You have a set of rules and you clearly know when you're infringing one of these. So god damn it, that's the way to go. If you want to destroy uncertainty and impatience biases in the market, have a set of rules and just stick to it. I know it can sound pretty damn simple to see and to say. It's of course much harder to apply. But the truth is there's no other way around that thing. You're going to get to learn it either the hard way or you're going to fail in trading consistently. That's the way to go. There's only one way out. You learning to fight these two biases. You have a clear set of rules that just clearly set the boundaries in which you're falling for the biases or applying the goddamn rules. And there is no shaded gray territory into this. The rules are goddamn simple. Either you do apply or you do not. And if you do not, that means you fell for one bias. Get to learn how not to replicate that thing the next time around. And that's how you get away from impatience of biases and fear of uncertainty. It takes some time. But that's today's lesson, okay? So guys, if you've fallen for any of the biases, well, just don't blame yourself. Just make sure the next time around, you will not do it, okay? Just don't repeat that over time. Falling one or a couple of times is absolutely normal. Just try not to constantly fall for them. That being said, I'm going to leave you guys with that. See you next week. Bye-bye.